February 22, 2026, 7 o'clock Singapore time. Americas. Markets and macro, last 24 hours. U.S. equities ended February 20th modestly lower. The Dow fell 0.5% to 49,395. The S&P 500 slipped 0.2% to 6,861. The Nasdaq fell 0.3% to 22,682. Investors weighed geopolitical risk and pockets of stress in private credit, even as energy and technology outperformed. Volatility ticked up, with the VIX around 20.2, and volumes were lighter than the 20-session average. Mini Story 1, choppy but resilient breadth. On February 20th, 7 of 11 S&P sectors finished higher, led by energy up about 1.9% and technology up about 1%. Utilities and real estate lagged, down about 1.7 and 1.3%. The setup for next week is that inflation and rates prints will drive the index, but stock selection keeps getting harsher as dispersion stays elevated. Mini Story 2, Atlassian guidance as a rate-sensitive growth tell. Atlassian raised fiscal 2026 guidance this week. It lifted cloud growth guidance to about 24.3% from about 22.5%. It nudged gross margin guidance up to about 87% from about 86.5%. And it lifted revenue growth guidance to about 22% year-on-year from about 21%. In a market repricing the timing of rate cuts, strong cloud momentum plus incremental margin expansion gives investors something concrete to underwrite. Europe. Markets and macro, last 24 hours. European equities finished the week firmer on February 20th. The FTSE 100 closed around 10,686 to 10,687, up about 0.6%. Germany's DAX rose about 0.9% to around 25,260. France's CAC 40 rose about 1.4% to around 8,515. The macro tone was shaped less by fresh ECB action and more by improving growth indicators and investor rotation toward cheaper European valuations. Mini Story 1, earnings outlook improves, but geopolitics caps the upside. A Reuters recap described the stock 600 as on track for weekly gains as the corporate earnings outlook improved, with leadership from personal goods, luxury, and a bid in defense names as Middle East tensions stayed in focus. The takeaway is that Europe is trading a dual narrative, cyclical strength in pockets of the tape, but geopolitics acting like a volatility tax. Mini Story 2, flows matter. Reporting highlighted a pivot toward European stocks amid U.S. uncertainty, with European funds seeing steady inflows after years of outflows. If the rotation is driven by valuation rather than a Europe-specific growth shock, the bid can persist until the U.S. narrative stabilizes or earnings revisions roll over. Middle East. Markets and macro, last 24 hours. Price action was dominated by the risk premium from U.S.-Iran headlines rather than new central bank policy. MUFG flagged oil holding near 6-month highs, with Brent around $72 a barrel and WTI around $67. The most acute local move was in Egypt. MUFG described a sharp Egyptian pound sell-off to around 47.6 per US dollar, alongside weaker sovereign bonds and an EGX 30 drop of nearly 3%. Mini Story 1, Egypt as the high beta expression of regional risk. MUFG ties the move directly to geopolitics. A rapid FX adjustment, weaker bonds, and a sharp equity drawdown are classic symptoms of a funding-sensitive market when risk appetite turns. The practical takeaway is uneven stress transmission. GCC balance sheets may be buffered by energy revenues, while frontier balance of payment stories like Egypt can reprice fast. Mini Story 2, credit market plumbing. MUFG also highlighted softer Middle East credit trading, with spreads weakening after an initially firmer open, while sizable Abu Dhabi and Qatar issuance helped clear overhang. It mentioned Oman long-end bonds slipping about 0.5 point, with yields up a few basis points, while the Sukuk curve stayed comparatively steady, suggesting investors took risk down in duration first. Asia Pacific, including Australia. Markets and macro, last 24 hours. Australia remained the macro anchor. The RBA's February statement on monetary policy kept the focus on sticky inflation, with the forecast track showing inflation peaking around 4.2% in mid-2026 and growth slowing below potential later in the horizon. Near-term activity signals were mixed, with the AI Group Industry Index listed at -12.3 and the Construction Index at +5.2 for February. Mini Story 1, Australia Deal Watch. Hims & Hers announced it is acquiring Eucalyptus, an Australia-based digital health company, in a deal reported as worth up to about $1.15 billion. Reported structure details included roughly $240 million in cash upfront, guaranteed deferred payments over the next 18 months, and performance-based earnouts extending into early 2029, with a mid-2026 expected close subject to approvals. It is a cross-border bet that GLP-1 and broader digital care pathways can be scaled internationally, with Australia positioned as a platform market. Mini Story 2, Australia Earnings and Policy Lens. An IG market note highlighted BHP's earnings strength, with revenue around $27.9 billion, underlying EBITDA around $15.5 billion, and underlying attributable profit around $6.2 billion. Alongside a higher dividend of 73 cents a share, fully franked, representing around a 60% payout ratio. Commentary around ASX Limited emphasized the ongoing